We're looking at MicroStrategy here on the weekly chart. Currently, what's sticking out to us is this green doji that we are creating here on this weekly candle. We still have one more trading session in here, obviously, before we get a close of this candle, but it looks like there's been a couple times in the past where the weekly chart has placed a doji, and the very next candle that was placed in here, the very next weekly candle, was a green candle. So here's one right here back in December. If you go all the way out to last year in January, you have one right here, green day next day. There's a green doji with a long upper wick. Boom, green day the following next day. Or I guess that'd be the following week, that is. These are weekly candles. So it looks like basically the past three times this has happened, that we got a green day. So this is happening right now, which means that next week could be placing a green candle in here on the weekly chart. That is, this is weekly. This is not the daily chart. So on the weekly chart, we could be placing a green candle in here next week, albeit we don't know how big that body would be or anything about that. We just know that basically three times so far it's happened and it's all been green the very following week. Our first resistance in here is going to be this 320 area right here. That is going to be a main area that we're going to be watching currently. And then our support wise, we're looking right around at this 260 area, 259. And then below that, we're going to be watching down here all the way at the 226, 228 area for our supports and resistances in here. We did close at 282.28, down around $30 from yesterday's close. Obviously, that's going to happen when you have the full market drop 20 points after market, right? So we expected a big drop and an increase in volatility everywhere. And volatility didn't really increase that much here in MicroStrategy because it was already basically high. But your IV rank in here is still at 29. It basically kind of stayed in that same area where it was. If anything, a little bit got sucked out in here today. Not a whole lot, though, because we still had that big drop. So that's what we're looking at here on the weekly chart. RSI and the volume, we're not really too worried about because everything on that big dip yesterday kind of adjusted everything for us back to basically average. We're going to look at the daily chart in here. If you want to tighten that resistance from 316, you can put it down here at 302. That's where that 9-day EMA is. But when you have these larger, basically high volatility stocks, they like to overshoot those big psychological numbers. So if you're talking 300, well, what would be least amount of surprise to us would be that it would overshoot the 300, hit the 316s or the 320, and then come back and sit on the 300s rather than just bang its head up against that 300, right? Because this 302, it's probably not going to hold up that long. It's just the 9-day EMA, so nothing really too crazy to worry about. And you can see back in here, you had a high at 306, you got a high at 309, right here, 309 as well. This is 310. You go up here, 320, 311, and then here you're looking again right around that 315 to 320 mark as your support. So really 300 psychological level doesn't really mean a whole lot. It's looking like it's overshooting everything. And we're just going to chalk it up and say 320. That is a better area of support for us here in the past in February. And it's going to be a better resistance for us rather than that 300 or the 302. But if you'd like to tighten it up, go right ahead. Look at the 9-day EMA currently at 302. We're worried about this lower trend line here on the yellow more than anything on the weekly. The daily, you can track that channel as well, or the lower trend line as well. But really, we want to see it kind of respect this and kind of go forward. Even if our candle has to start off down here, we have to open down here next week, right on that trend line to in green. That is fine. And we just want to see a respect of this within the next couple weeks to confirm, hey, we are still going forward here, but we really want to see a break and hold of these 320s, and then we can start worrying about this gray channel up here, because this area is kind of where we want to be at. That's where we were back in February, but we got a long ways to go. That's currently trading 420 to around 460. Also an area of support that's going to be a good supply zone for us, because this is a harsh resistance for us back here, basically from March to October of last year. It's going to be this channel over at 195 to right around that 160 area. So that is going to be a channel that we're going to be watching. If we get a pullback in here any further, which I don't think we will, it looks like we're going to respect that trend line. If anything, max pain is going to be here right around those 226 to 230 areas. Now, IV, we did mention that it wasn't really a crazy amount of IV in here getting sucked out, but there wasn't a whole lot getting pushed into it either. Your IV rank is at 29. You have right around a $13 expected move by tomorrow. So a 2 times expected move could put us right here where our next support is that we had. or I'm sorry, resistance that we just talked about here. If you go all the way out to the following week, everybody's pricing in right around a $30 expected move. And then if you go out to your April expirations, $40. And if you go all the way out to your May expirations, everybody's pricing in right around a $70 expected move. So pretty big moves. The further you go out, everybody's pricing in. Obviously, that's kind of what you expect, but there's still a lot of volatility out in those further dated options, because if you go to try to sell a 30 Delta Iron Condor right now in your May expiration, so everybody's pricing in right around a $60 expected move. 30 Delta, $20 Iron Condor will get you right around $10 in credit received. So really, when you're doing Iron Condors, you want to take a third of the width of the strike. So 20, we're getting half of that, right? We're getting $10. We're getting over $10 on credit received. So you're getting over 50%. That's how much juice are in these options that are further dated. So your April 17th, your May expiration, your June expiration, a lot of juice in there, even though you're only getting a $13 expected move and not a whole lot of crazy action in your expiration that's happening tomorrow. So keep all that in mind. I know it's a lot, but overall weekly chart, we have to respect this lower trend line here. We're looking at the 320s for a harsh resistance. Above that, we're kind of just going to wait and see until we get up to those nice whole numbers, 350, 400. Support wise, we have to respect this lower trend line. Below that, then we're looking at this 230 to 226 area. We have to wait and see how much volatility will get sucked back out of the market, and see, keep track of your deltas as you're looking at those further dated, because if you're not tracking volatility, you're not looking at the VIX, you're not tracking IV percentile, IV rank, or anything like that, just go out to your monthly expirations and sell Iron Condors and just see how far away you are from a third of the width of your strike. So if you're trying to sell $10, if you're getting more than $3, there's volatility in there. If you're selling a $10 Iron Condor and you're only getting $1, that there's low volatility. That is an easy way to track it. And right now you're getting 50% of your your wings, right? The width of your strikes here. So you're getting more than $10 on the $20 wide Iron Condor. So there's good juice in here, those further dated options. So we'll see what happens in here, MSTR, in the following weeks or so. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.